All right, welcome back for the episode of Carnivore Trades. Today is Monday, August 21st, 2023. If you've not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So markets here, staging a little bit of a rally. Again, so we talked about this last week. Did we put in a possible pivot low? Certainly looks like we have some follow through. Again, we talked about it Friday saying we have a nice little rally. We came off the lows, finished green. But it was OPEX Friday, right? So that could have been anything. They could have just been closing it flat on purpose, little max pain move. But we did get some follow through to the upside. And we actually traded negative for a little bit today. As you can see, we pulled back there. Dow, Russell, all pulling back. And markets kind of getting back to the positive side. Qs are up 1.7, spiders up 70 basis points, Dow flat, Russell's down a little bit, but that chart looks okay right now. So we actually did, scratch back again after kind of testing the downside. So it does look like we have a little bit of a pivot low here in place. A couple of things going on today. Right now, first of all, doing a lot of the heavy lifting, Tesla holding up really well here, but NVDA, right? That just added I think 100 billion in market cap today, up 8%. So just absolutely staggering. They are absolutely juicing the hell out of this thing. So you got a 50-point move from here to here, and you add that, you get 465. We're right there, 470. I don't know how this is going to end here. I don't think I know how it's going to end eventually. As far as earnings reaction, though, I don't know. Maybe they pump this thing one more time. There is a lot of FOMO in this, though, and I mean a lot. There is gamma squeezing. Take a look at the intraday. Not building any support. It's just gamma squeezing up. Every fund manager is piling into this. These things can go on a little bit longer, but I don't see it playing out very well here. If you look at how the other AI names performed, and NVIDIA is the leader. It is the head honcho. Maybe they pump it up to 500, but this looks really, this is the type of stuff that we were seeing in 2021, right? With the same exact stock. And, it had this parabolic move and it sold off 70% after that. Do we have a similar setup here? It's certainly possible. If I had to guess, I would say right now, maybe we have honestly a more of a nothing burger reaction. And the only reason I say that is because premiums are going to be juiced on both sides, so it's going to have to be a big move in either direction to really cause some sort of gamma move. But either way, that is doing a lot of the heavy lifting today. And what's interesting to me is, as I was trying to get into a minute ago, so you had the 30-year making a 12-year high, and the 10-year making a 16-year high. And you've got NVIDIA up 8%, Tesla up 8%, Q's up 1.7, Microsoft having a nice day up 1.7, IGV up 1.78% there, and XLE red. So one of these guys is lying here. XLE and furthermore to crude down 52 cents. Yields up, hitting new highs. Crude should be rallying with that, and it's really not. Another thing that should be rallying today is a dollar index, and that is flat. Here's my guess. I think, and this may be a surprise to some of you guys, but I think yields are lying for once. You guys know I've been a bond bear. I've been bullish yields for the last 2-3 years. I've made that very clear, but I think at this point, it is just priced for perfection. Kind of like NVIDIA is priced for perfection for earnings. You're into a double top on both of these. Last week, the Fed minutes got everybody expecting a hawkish Fed for this Friday. Looks to me like they're just throwing on some last minute bond shorts. And when you have that happening going into a volatility event, it's going to make it really hard for this to continue rallying, especially given that it's into technical resistance. Now, it doesn't mean we can't pierce it and go a little bit higher, but we're already getting a little overbought here. And just looking at my my Twitter feed, just anecdotally, it's like nobody's bullish bonds. Everybody's talking about how yields and this and that, and the world is going to demand a higher interest rate. All these things are true, but short term, I think we're in for possibly a counter-cyclical move here, or I should say a counter-secular move rather. But it is interesting to me that the yields are up as much as they are, and you have the market green, and you got energy red. Energy is like the weakest sector today, so technology is leading. That it does not make any sort of sense in any way you slice it. So to me, it looks like there's panic hedging ahead of the Fed Friday. Why that also doesn't add up is that something's off here, right? Somebody's lying here. The other reason why that doesn't add up is that you have stocks pushing higher, and we talked about this over the weekend and last Friday. Stocks are up into Friday. I gotta think it's going to be sell the news, right? If we're down, if yields were up today and the markets were down, I'd say, oh, we're just, you buy Thursday, buy Friday morning, buy the panic, right? But you're seeing kind of a positive correlation here. Is that telling us that stocks are going to sell off and bonds are going to finally act like risk off? It's certainly possible. That could be something to keep on your radar. But right now, as far as technicals are concerned, that's all I really care about. We're going to look at the 50 MA and this upsloping trend line, right? So 445 area on the spider. As you get up into that area, then there's going to be pretty good resistance. Then you have the 20 downsloping above that with the 450 whole round number handle. Right in that area for the triple Qs, 1.6% gain here. Again, same spot, right? 50 MA and got to get myself a new mouse here because my clicker's messed up. 50 MA and 20 MA necktie, bow tie necktie, 372, 370 area. That's kind of, right where you broke down to. So that should be resistance. And then, of course, if you get through that, you've got this trend line here and the 380 level. So there's resistance up above. We'll see how the market trades. Again, maybe we sell, maybe we reverse this tomorrow. We didn't build any support, right? We built a little bit there on the Qs. NVDA sure didn't build any support. And that basically did all the lifting today. So you can knife right through this, but maybe something happens tomorrow and there's not a lot of economic data. Maybe NVIDIA shits the bed and we go right back down, and that's how we get down to 430 before the Fed. So we'll see. But those are the levels we're watching there on the markets. IWM was red today, but not terrible, right? Got a little inside hammer. I don't see any problems there. That looks okay. That looks like it can get a move, possibly even back into the 190 handle. So no real issues with the Russell here in the short term, a little oversold there. Dow also a little hammer candle after the bid on Friday. Again, red, but nothing terrible. Short term resistance will be 350. And this is your support here. So that low today, you take that out on a close, you probably headed back down to 338. So, but Dow holding up and hanging in there. Okay, we'll leave it at that. Markets at the close here in just a minute. Let's look at the semis. Again, obviously that's getting a bid with NVIDIA up. Although I will say AMD 2.5, KLA 10 core up 2.5, Applied Materials up 4.25, Texas Instruments up decently, Qualcomm green, Intel is red, but it's holding. Oh, and then goes back to the green side. So yeah, so semiconductors, the whole sector is doing okay, and that is a good sign here in the near term. We need the semis to lead, and that is the case. We'll still watch that at that 50 and 20 moving average necktie there. So that will be resistance here in the short term. IGV Cloud Software needed a bid here today, but that had a failed pattern last week. So again, we closed below that green bar, not a good sign. Doesn't mean we can't get a bid, as there is the market closing. So closing just off the highs of the day. We'll get back to that in a second. But again, same area, 20, 50 MA, and then you got this downsloping trend line there on the IGV, right above that. So that could be your next area that it wants to go tag. We'll watch that over the next couple of days here. Dow Transports slightly positive, up just $5 here. Not much there, only 3 basis points, holding the 50 moving average. Again, we'll watch that at 16 and then 16,250 for resistance. All right, let's get over here to interest rates. So we'll start with the 2-year as always. 2-year holding up okay. Again, getting back above 5% again today, although it did close just below that, but still looks very strong here. It looks that the 2-year to me is the least overbought. So again, that curve is starting to tighten up a little bit. You can see here the 2s and 10s spread starting to inch back higher, 3-month 10-year inching back higher. So again, these are the types of things that happen before the recession starts. Maybe that's the sell the news thing, right? Maybe the Fed pauses, and the market likes it initially and then says, wait a minute, why are they pausing? Oh, risk off, bonds, recession, that type of deal. Just throwing that out there. It's a possibility. The 2-year does look the least extended here. Again, 5.33. That's the breaking point. You get above that, there's bigger problems than recession. 5-year holding up okay. That's at 4.46. Again, that's knocking on the door. You got a nice cup and handle pattern. 5s look good. 10s, again, into double top. So just be aware of that. 30-year peaking above double top. we'll see how that trades out through the rest of the week here. But yield's very strong here. Again, counter-cyclically, can they get a move lower? Yes. That doesn't mean I'm bullish bonds long term. Just means in the short term, I think the contrarian play is probably the smart one here. If I had to pick a side in the next, couple of weeks. Anyways, housing XHB here down 0.75%. So that was a weak sector. It's about time. It's down 59 cents there, holding the 78 handle. This, if this gets a bounce, it could put in a bear retrace. Maybe even a little micro kind of head and shoulder there. But for right now, slightly red on the day. There's ITB. Again, we talked about 82.50. It's holding that area right now. Again, resistance will be around 80. Let's just call it 86, 86.50 right now. That's where you broke down. So that should be resistance on the upside. VNQ slicing through that trend line a little bit. We'll see. Maybe it gets down here. I think it's a buy. If you get down here in a straight line, I probably would pull the trigger on it myself, just given how oversold it is. But short term, might get a bounce and hold that area. Still has upside to about 83 and then maybe 84 there, but we'll see if and when it gets there. XLF on the softer side as well. Remember, that had a failed pattern last week as well, closing below that green bar, failed inside bar. So I think XLF is headed lower here. Again, doesn't mean we can't bounce in the short term, but not a good sign there to see it close below that on the weekly. KRE needs to hold 44.50. By the end of the week, KBE needs to hold 38, but again, they're trying to hang in there right now, but starting to look softer. Broker dealers, nice day, up 0.75%. Look where it stopped, right at our trend line there, and pulled right back. Maybe you can get up to the 20 MA here. I think I said 500 to you guys over the weekend, and oh look, 499.64 today. So yeah, if you zoom out, okay, you can see that little wick there. So basically got to the 500 handle. Maybe it gets a little bit above that. Again, the 20 MA down sloping there, but may need to come back in a little bit here. But broker dealers, still a very strong sector there. Okay, crude we already talked about a little bit. Again, down 50 cents. Again, strange with yields up, right? Not confirming, right? It's not confirming the move in yields, and usually bonds are smart, usually bonds are right. But right now, I think it might just be managed money chasing the short yield trade because they're worried about a hawkish Fed. The Fed minutes set the table and basically said what they're going to come out hawkish this weekend. I think they will. But expectations and pricing matters, right? So, if stocks are at all-time highs and the Fed comes out really hawkish, we could sell off sharply. If stocks are lower or bond yields are higher, etc., it all matters on where we are on the charts and how positioning is. But either way, crude here still backing off a little bit. I think that's all it is. If we look here on the weekly, this ain't nothing really wrong here. I mean, you could chop in this range here, put in a weekly bull base, and then you can push up into the low 90s. So right now, I don't see any issues with crude, but I think it needs to do some backing and filling. Got some questions about gasoline too. RB here, the contract did roll over here, but if you just look at the UGA, again, very strong chart until proven otherwise. You have a lot of supply up here. If this consolidates weekly, this can go higher. It needs to catch those moving averages up, but the trend is up nicely in gas prices, which is not good for us, but just FYI there. XLE pulling back a little bit. Again, this sector should have been green with high yields. Tech was up. So, but either way, trend's still up. It's holding up okay. Nice inside day, no problems. XOP managing to close green. This is overbought, but still holding up well. OIH trying to work off an overbought condition. I still think that wants to get to 370. Nat gas up about 6 cents today. Nothing terrible. Trying to hold this trend line here in the short term. And we'll see how that trades into the fall. Seasonally, it does do very well into the fall. So maybe that's starting to get a ramp up. Obviously, it had that nice bid a few weeks ago, then it pulled back in. We'll see if it can curl back up here in the coming days to weeks. Okay, over to the dollar index. Again, yields up. Where's the dollar, right? So again, these questions I have. Not down a ton, nothing wrong here. Daily chart, you just got daily flagging in play. You let those moving averages start to catch up, 20, 50 perhaps. This can go higher. But again, another thing too, the dollar's into resistance too, going into a volatility event. Weekly chart resistance too, not daily, weekly. So again, it's going to have to do some backing and filling, I think, to get through that anyway. But, yields making 30, not 30, multi-decade highs on both the 30 and the 10-year, and the dollar is red. So just food for thought there. So Those are my question marks for the day. Gold here. Again, another thing. Gold into support, right? So we're kind of close to that 19. I've been telling you guys 1900, 1900, 1900 for 3 weeks. We're into support. I got to think that, the counter trade here is probably going to get a bid, right? So what could cause that? Oh, let's see. Maybe the 30-year bond gets a bid and causes gold to bid. So seeing these kind of things all line up here tells me that I think yields could come back. Stocks are a little bit of a question mark right now because they're kind of trading positively to yields, at least for today. But again, just something to keep on your mind. Silver up 2 3/4. 23.50 is still resistance here on the daily. We get through that, we can go to 24 to 24 1/4. I think it still has one more push down, but doesn't mean it can't get a bounce here in the short term. Platinum also getting a little bit of a bid up 30 cents. Let's not make too much out of that. That still has to go lower. Palladium still has to go lower. Not going to spend too much time on that. Copper up 0.5%. Again, that can go to 380 to 383 here in the near term. Okay, over to Bitcoin. Everybody wants to know about Bitcoin here. So Bitcoin coming in here, what a shame, right? So had a really nice weekly pattern there, and that just, it broke down. Technically speaking, this has not failed, believe it or not. We never closed below 26,33193 on a weekly close. That's what I go off of. Now, I'm not going to sit here and lie and say that this is still a bullish chart. It's definitely lost that bullish structure here. But I'm only saying this because I've seen this happen before, where you go to test an inside bar low and you close near it, but you don't close below it. And I've seen it reverse before. What's the catalyst for that? I don't know. I'm just saying that can happen. I do think daily we are very oversold here, but obviously they've done so much technical damage to this. It's going to be hard to get bullish. And then when you look at Ether, that's a pretty clean breakdown. So, that combined with everything else does tell me that it's probably headed lower, but I think you get some type of a counter trend pop here. 28,000, 28.6 could even get up there. It's gotten a hit here. It hasn't really done much since then, but what a pretty good breakdown and ruined that nice weekly bull structure. But again, we'll watch that on the weekly chart. If we do break that on a weekly close, this is probably headed down to 22. So just be aware of that. But Bitcoin trying to hang in here, I do think it is due for some type of a bounce, although obviously lost that nice bullish structure. Anyways, question marks aside here with bonds, spiders, again, look for this area here, 50 MA, 20 MA, upsloping trend line, same thing, same exact thing on the triple Qs. That looks like your target right now. And we'll see how the market behaves into that. Obviously, NVIDIA is the wild card. If they crap the bed, it could be a different story. If they go to 500, maybe it saves the day. And then, of course, the all-important Jackson Hole. How we trade into that is going to determine what we do for the rest of the month and for most of, I think, September anyways. But anyways, let's wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.